everyone. Good afternoon and happy Wednesday. We are back with another very exciting topic. I know a lot of you guys are going to be interested in blockchain. So Pavan, do you want to do the honors of introducing our guest?
Yes, we have the esteemed Lee Bratcher coming in live from Austin, Texas, and I'm live from Antigua, I guess, middle of the Atlantic Ocean someplace. So here I am. This is how not smart I am. So I take a few days off to go on vacation. And what do? I go from one tropical island to another. So we land here. This looks just like Dorado Beach.
Could have just stayed home.
You could have just stayed home. Yes, exactly. Except, you know how it is vacation. You want to just get away from everything and disconnect. Right. But they still have internet. So I'm still connected. And I'm still doing this podcast all for you because I love the audience this much. So let's do it. Lee, so excited to have you on this show. And tell us about your life, your humble beginnings. Are you married, single? Because I know there's a lot of single women out there that are looking at you right now saying, oh, my God, I hope he's single.
Sorry to disappoint, Pavan. Married with 3 kids. Yeah, we've got 3 wonderful daughters. And first of all, it's an honor to be on. And we love what you guys are doing with Angel AI. And it was great to have you at the summit last year speaking on the future of banking panel with your deep experience in banking, and looking forward to having you again this year. We'll dive into that a little bit later. But yeah, I coming out of college, I joined the military, and I was an Army officer for a few years. I've been in the Army Reserves for about 13 years. I still serve in the Army Reserves as an innovation officer for the 75th Innovation Command, which supports Army Futures Command. On the civilian side, I was a political science professor at a university here in Dallas, researching blockchain and property rights. I first was researching property rights. And I was at the Army War College studying how when people are secure in their property rights, they're less likely to be involved in conflict, intrastate or interstate conflict. And then I read the Bitcoin white paper and I thought, you know what? There is such a thing as digital property rights now that we have digital scarcity through blockchain. And we can apply those same kinds of principles to the real world with real world assets. So that was back in 2014, 2015 when I discovered it. And unfortunately, I'm still working for a living, so I didn't invest a bunch. I mean, I invested a very modest amount of professor's salary is very limited. So, I wasn't a crypto OG, if you will. But that's how I really got into it from the academic perspective. And then I started researching and really realized there was a gap in the market for a group that could translate the sort of the rough edges of the blockchain crypto ecosystem to policymakers, elected officials, regulators. And so in 2019, I formed the Texas Blockchain Council.
Okay, that's super interesting. And I heard the word digital scarcity. And before we go into that a little bit, okay, I want to tell everyone in the audience that this podcast is not scarce, but it will be if you don't hit the like and subscribe button. So please smash those like and subscribe buttons. Let's get it out there. Let's not make this scarce. Let's make this widely available. And can you explain to the audience what is digital scarcity? Because most of us think about, computers as, if I run out of disk space, I just buy a bigger hard drive. So how can digital assets become scarce?
Sure. Yeah. And Napster pretty quickly proved with its business model that once things get on the internet, they're infinitely replicable, and that doesn't really work with money. So Bitcoin really came around to be that innovation that combined cryptography, distributed computing, distributed ledger, with just some very elegant consensus mechanisms. The proof of work consensus mechanism is incredibly elegant, and it created digital artifacts. In this case, Bitcoin, or UTXOs, that are scarce. UTXOs standing for unspent transaction outputs. And so it can be verifiably and provable that this asset is not replicable. It doesn't belong to anybody else. And that in the digital world had never existed before the publication of the white paper. And so amplify that onto other kinds of things that we need to have provability of scarcity, like real world assets, like real estate. And you have a very interesting topic that's going to change the world.
Yeah, and there's a word that's thrown around a lot, which is immutability, NFTs. I've talked about this in past podcasts, but I think it's better that we hear from Dr. Lee himself. Can you explain what that is to our audience of mostly realtors and loan officers? And they're always and many of them have invested in Ethereum or Bitcoin and have done quite well, and are wondering whether they should get in now, buy on the dip, or stay in the sidelines a little longer. So that's actually two questions in one. So what is immutability, and what is immutability, and what is an NFT, and what should people be buying? Should they buy an NFT? Should they buy Bitcoin? Should they buy Ethereum? What are your thoughts on that?
Yeah, so immutability, that would involve the inability of a ledger to be changed. So blockchain is sort of the next iteration of double entry accounting. Double entry accounting has been around for 500 years. It was invented by or developed by Luca Pacioli during the Renaissance and perfected over centuries. We still use it today. It's a very effective ledger system. And what blockchain does is adds a layer, sort of an advanced layer on top of that, in which you don't have to have centralized authorities to keep the ledger to ensure that it is secure and true. So when you have an immutable digital ledger, there's no centralized authority. There's no ability to change that ledger after it's been hashed onto the blockchain. And so you can be secure in knowing that the record of ownership of the asset, whether that be Bitcoin or real estate or some NFT, non-fungible token, is accurate. And so as far as the question of what people should invest in, I certainly would not be able to give investment advice, as I am not an investment advisor. I can say, personally, I invest in Bitcoin and Ethereum both. I don't do a lot of altcoin speculative trading, just because I am too busy with my job to really spend a lot of time on that. So the gold standard assets for everybody in this space are Bitcoin and Ethereum. And I am the proud owner of several tokenized shares of some real estate assets, including one of the St. Regis Hotel in Aspen, Colorado. I bought a few shares of that. Yeah, I think the minimum share price was like $1,000 or something like that. So you can buy it with a relatively small investment. So I think there's a lot.
Can you get me free rooms there now?
I wish. That is a possibility, but you got to buy like $1 million worth of shares. You have to be a major shareholder to ascertain that level.
So talking about buying these coins, if we have people who are new to investing in crypto on the call, which I'm sure we do out there, does it matter how they're obtaining it? Like there's all these different wallets out there, right? So is there a standard or a reason to pick one over the other?
It's a great question, Angel. I would say there's tons of different wallets, as long as you keep this concept in mind that you need to own your cryptographic keys. So at the very basic level, if you own a digital asset on an exchange like Coinbase, you really don't own it. That asset is held in custody by Coinbase on your behalf. And if Coinbase goes bankrupt, it's likely that would be you'd be an unsecured creditor and probably receive some fraction of that asset back. So what we always recommend and educate is that people research wallets. You want two different kinds of wallets. You want a digital wallet on your phone, and there's a lot of them out there. We could talk about several. I know there's the MetaMask wallet is very popular for Ethereum and NFTs. For Bitcoin, I use the Moon wallet for Lightning. There's the wallet of Satoshi. There's the Unstoppable wallet, which I use for my regular Bitcoin transactions. And then I use Trezor for a hardware wallet. So two types of wallets, your app-based wallets and your hardware wallet. And so the app-based wallets are, think of it as like your billfold. That's where you're going to keep a couple $100, nothing extravagant. You're not going to want to have like multiple Bitcoin in your hardware, phone-based wallet, because it is a little bit more vulnerable. Like, it's not going to be hacked, but for example, say you lose your phone and you lose your backup seed phrase. Well, then you've lost that Bitcoin, because there's no centralized authority to go back to and say, hey, restore my password, restore my seed phrase. These are bearer assets. That's like cash. If you lose your wallet that has a $100 bill in it, that $100 bill is gone. So, we recommend people to not carry more than 4-figure amounts in their hardware wallets on their phones, unless they're, about to make a large transaction. And then we do recommend that the substantial, bulk of your investment be in a hardware wallet. The best ones out there are Ledger and Trezor. I happen to use Trezor, but I've used both. They're both great. And those are devices that are USB plug into your computer, and you're able to interact with your wallet, but then you're able to unplug it to secure those devices offline in cold storage. It's called cold storage. So we recommend people investigate both of those options.
Yeah, and then of course, AngelAI is coming out with her wallet.
Amazing.
Yes.
I'll have to jump in and give it a shot.
Yeah. So AngelAI is coming out with her wallet later this year. We're really close to wrapping that up, and you will be able to keep your digital, your crypto assets in it, as well as US dollars, and so fiat and crypto assets in the AngelAI wallet.
That's impressive, because that requires a lot more back-end work than just digital assets. To be able to keep fiat in there, you have to have some banking rails, and which you do as the CEO of a large bank. So that makes sense.
Well, a small correction: a large mortgage bank. So we're not FDIC insured. We do have some very, very good partners in the banking industry with FDIC Bank that are helping us get through that part of it.
Amazing.
So, yes. And so we talk about banking and crypto. The next obvious question is CBDC, central bank digital currency. And what is that? Can you explain to the audience what that is? And do you think it's going to come to fruition? Because I thought there was a group of congressmen that are pushing to, I think I read recently, they're pushing to block the feds from enacting it.
That is a battle currently going on in DC. A central bank digital currency is simply a digital dollar that's running on blockchain rails. We already have digital dollars, but they are running on sort of anachronistic, archaic rails like ACH and different things. And they're just ledgers updated by the banking core software. And with the CBDC, it's possible that a consumer could have an account, like an American citizen could have an account directly with the Federal Reserve, and the Federal Reserve would issue, you would give them your old US dollars, you'd do an ACH transaction from your bank to the central bank, or the central bank would just transmit it on the back end, and you would be issued a CBDC, which is a digital dollar on blockchain rails. It is sort of a bastardization, if you will, of blockchain, right? Because it is not decentralized, and it is. There are some security concerns as well. So on the blockchain trilemma, it's really not the right way to take this. There's some pretty severe privacy concerns that, as you mentioned, Representative Emmer, Senator Cruz, Representative Davidson, and many, many others on both sides of the aisle, Republicans and Democrats, have very large concerns with this. China has created a central bank digital currency. They use it in tandem with their social credit score. So they can turn off your money if they want to. They can impose a negative interest rate in like disaster zones. If there's been like like a flood or something, they can send relief money that expires. So they can send money to people that in the affected disaster zone that expires in a month, which, maybe that sounds humane, but imagine if that's used in a nefarious way or a Big Brother type way. So a lot of privacy concerns there, and we are certainly against central bank digital currencies. And It's going to be a battle. The Fed definitely is going to push for it because it gives them more control. And what I tell people is it's not that I don't trust the Fed now. I don't trust the Fed 10 years from now. Because if you give them this control, they're going to be hard pressed not to use it a decade from now.
Yeah. So, I think the other challenge is if people can have an account directly with the Fed, then why do you need your local community bank?
Yeah,
right?
That's a problem.
An entire industry could get wiped out overnight.
That's a big problem. And the banking industry is very much against central bank digital currencies, which is an area that we've found common ground and done some joint advocacy on with banking lobby groups.
Yeah, and I'm going to challenge you a little bit here, though, is with the question, is Bitcoin, for example, is it truly decentralized? Because with all the consolidation in the mining world, it's come down to just a handful of major, I think like 4 or 5 big miners that control all of Bitcoin, and the board now is reduced down to, I believe, down to 4 people that can make that can vote on making the decisions on changes to the protocol. So it's actually now, I would argue that Bitcoin has become an oligarchy, because if all the mining is concentrated to a couple of companies, they could completely change the direction of the chain. So you agree or disagree with my assessment?
I agree with your assessment that there needs to be more decentralization, for sure. I disagree with some pieces in that, there are hundreds of Bitcoin miners, probably thousands around the world. We have 30 Bitcoin miners just in the Texas Blockchain Council alone. Several of those are publicly traded miners, and some of them make up 3, 4, 5% of the global hash rate. So they're very large. But the concentration in mining pools is a little bit more concentrated. So the top 3 or 4 mining pools do control a significant amount of the hash rate. Thankfully, though, those mining pools are unlikely to collude, because some of them are out of China, some of them are out of the U.S. 2 large mining pools in the U.S. That would, not collude with any other miners. And on the core developer point, there are Bitcoin improvement proposals that are launched by the community, and they go through vigorous debate. And there are, there needs to be more Bitcoin core developers. That is true. I think there's still hundreds of Bitcoin developers, but as far as like the core developers, there's only a handful that are really updating the core. Thankfully, though, they can't update the core without consensus from all of the other developers. But there does need to be more incentives for developers to be to work on the Bitcoin core code and software.
Yeah. So, and I think Ethereum is a corporation that controls that, right? Isn't it? It's not as open as Bitcoin.
No, Ethereum is also decentralized. There is the Ethereum Foundation, which I think is probably what you're thinking of. That is certainly not in control of Ethereum, but Vitalik Buterin does wield a significant amount of influence over what protocol changes take place, despite the fact that he doesn't technically have authority to. He has a lot of influence over the different node operators and the different stakers. Ethereum has moved to proof of stake. So the different stakers and the different core developers there on that side of the house. So he does have a lot of influence, perhaps needs some more decentralization there as well.
Yeah. Now, isn't there I'm not completely up to date on this issue. So isn't there an issue happening with Ethereum where on these proof of stakes, right? And there's a time when these stakes expire and they're released, and that would create a flood of Ethereum into the market. Did I get that right?
Yeah, people, when the transition to proof of stake happened, there was an inordinate amount of ETH that was locked up in staking contracts that will periodically become available for those users. So they can do three things, right? They can keep it locked up for longer to earn yield. They can unlock it, or when it's released, they can then sell it, or they can just hold it, hodl it, as we say in the crypto community. So those are. I think there will be some downward price pressure because there will be a little bit of sell pressure at that time. Now that could be counteracted by the next bull run. It could be more than counteracted by the next bull market, which, we expect to happen in 2025, or excuse me, 2024.
Okay. So why do you think a bull market is going to happen in 2024?
They typically follow the Bitcoin halving events. And so the next Bitcoin halving is in April, 6 months from now. And we expect to see some significant, no one really knows when, but typically if you look at the charts after the halving, every halving, there's been a significant increase in price, and every halving has ushered in a bull market over the last 10 years. So, or really 12 years, so the last several halvings. And then another reason why I think we're primed for another bull market is the eventual approval of a spot ETF for Bitcoin, and eventually probably a spot ETF for Ethereum as well.
Fascinating. So I'm going to back up for a little bit, and where you, at the beginning of this call, you talked about holding on to your keys, right? And everyone has probably heard in the news what happened with Sam Bankman-Fried and FTX and the fraud that resulted. So that's an example of what could happen when you let somebody else hold on to your keys. So can you educate the audience a little bit about that? It was all over the news, and it actually, I think the side effect of that was, I think one or two banks went under as well, right?
Yeah, sadly, the bank's insolvency, both Silicon Valley Bank and Signature Bank, was related to their overexposure to long-term bonds. And those bonds just plummeted in value when the Fed raised interest rates. And, those banks were losing billions of dollars because of their interest rate exposure, and they hadn't really hedged that very well. The Sam Bankman-Fried situation was classic fraud, and it's a tragedy, similar to what we saw with Enron. Sam Bankman-Fried and his team were allegedly, and I guess provably now, were rehypothecating customer funds for their own profit. And so they were reinvesting funds that the customer had invested in their exchange, not in the equity of the exchange, but as a custodian, right? So I bought a few Bitcoin on their exchange and thought that, FTX was just holding that in custody for me. But in reality, they were taking that and they were lending it out, or they were buying other assets with it. And when the tide came out, they were swimming without shorts on, and they were certainly underwater because they had invested in a bunch of speculative assets. And during the bear market, those assets plummeted in value. And therefore, there was sort of a classic bank run. People started to realize FTX might be insolvent, and they try to start pulling their funds out. And when they pull their funds out, there wasn't the funds, the liabilities did not match their assets. So we actually worked in Texas on House Bill 1666, which is a proof of reserves bill. That bill requires any exchange that does business with Texans, which is every US-based exchange has customers in Texas, to provide a quarterly attestation of their liabilities and reserves to the Texas Department of Banking, and a yearly third-party attestation. So it's just a mechanism where, it's not a perfect system. We still need traditional audit and assurance practices, but combine traditional audit and assurance with proof of reserves, and you have a pretty robust system that is not foolproof, but it is better, certainly, and will be a improvement upon the situation that FTX found itself in. So we're very proud of that legislation. It went into effect about a month ago.
So the bottom line for anybody who's investing in crypto assets is hold on to your own keys. And going full circle here to beginning of this call and why having a good wallet and good education on this before you jump into it is really important. And there was a bank in San Diego, right, that got mixed up. I don't want to say their name in case I got this wrong. That was mixed up with the FTX debacle.
I think Silicon Valley Bank was banking them, if I remember correctly. Signature Bank also had a bunch of crypto clients, and both of those banks failed, obviously. And those crypto clients were stuck trying to find new banking relationships, and it was very difficult for them because there was a little bit of contagion. And even though the contagion was caused by interest rate increases and all these banks just having incredible interest rate exposure and not really thinking the Fed was going to raise rates so high, the crypto industry got caught up in that, and it was challenging for many companies to find banking relationships after that.
Yep. And being from the mortgage business, we have a saying here that hedging your book is expensive, but not hedging is even more expensive. So remember that, kids, hedge your position. And for all the loan officers and realtors that are watching, if you got a borrower and you got interest rate in it, and I don't know whatever the markets are right now, 7% or whatever, 10 years close to 5%. And if you're hoping that the rates are going to fall, the 10 years is going to get a little better, hey, it could go any which direction. So lock it in. If the payment works and the person can afford his house at that interest rate, lock it in, because you have no idea what's going to happen. So, you got huge national banks, Signature and SVB and many other banks that thought they were really smart, and they are really smart, but they're not smarter than the markets. No one can predict what's going to happen.
Yeah.
So pay the insurance, hedge your position, and protect your consumer. That's the lesson of the hour, number one. And number two is hold on to your own money, hold on to your own keys. Don't give it to anybody else, because no one's gonna love your money as much as you do.
100%.
Just like we say at SunWest, no one's gonna love your house as much as you love your house. So when we give you a home loan, all we care about is how much do you love your house. Okay, so now, Texas Blockchain Council is having a great big event in November, correct?
That's right. Yeah, we have the North American Blockchain Summit coming up November 15th through 17th in Fort Worth, Texas. Lots of great panels. Robert F. Kennedy Jr. will be there, Senator Cruz, Senator Wyden, Senator Lummis. Our good friend, Pavan, Andrew Yang, who's been coming for the last few years and who I know you and I chatted with at the last summit. And we'll also have you on the AI and blockchain panel with Mance Harmon, the founder of Hedera Hashgraph, and Rich Weidman, who leads Google AI's digital asset division.
Yeah.
Excuse me, Google Cloud's digital asset division.
Yes, and I'm working on twisting Vivek Ramaswamy's arm to come as well. Hopefully,
we have a soft yes from him, is what I think.
We have a soft yes. We don't have a hard yes. Yeah, so that would be fun. I would love to interview him again. So how does somebody get signed up to go to the North American Blockchain Summit?
So they would go to NorthAmericanBlockchainSummit.org. There's the tickets there. Now, for our friends in Puerto Rico, if they are interested in coming and supporting Mr. RFK, I will make this commitment to them. If they do come and make the donation to attend his private fundraiser there, we will personally provide a complimentary ticket, VIP ticket to the summit on their behalf or for that person. So anybody who's from Puerto Rico that wants to come and support RFK Jr., who's I think a champion on the island, as I've heard. We'd like to thank you in that way.
Yes, RFK Jr. is very much loved on the island. And plus, the island loves Texas because look at the flags are almost identical.
That's true. They are very similar.
Yeah, the Puerto Rican flag and the Texan flag is very, very similar. So there's a lot of reasons for Puerto Ricans. All of my friends here in Dorado and Condado, go to North American Blockchain Summit, register, and let me know. You all have my number. If those listening in Dorado and Condado, you have my number. Send me a WhatsApp or a text message, and let me know you're coming, and I'll make sure you get a VIP ticket from sponsored by Texas Blockchain. And come out there and support RFK Jr. that we all love. Okay, so now the panel that I'm speaking on, tell me a little bit about that, because actually all I know is that my people arranged for me to be on this panel.
Sure. It's sort of the topic of this podcast too, which we haven't really dived in much on, is the confluence of AI and blockchain. And Hedera Hashgraph has a very low cost layer one, high transaction throughput, and is really poised well to be a buttress to data integrity and proof of authenticity. And so with the rise of AI, as you know, there are going to be a lot of questions out there around the authenticity of images, of voices, of written material, just really anything. Just with the compute power that's going to exist and the large language models that are already taking the world by storm, it's going to create some problems. And I think Elon Musk and others have alluded to those problems. There's going to be some regulatory challenges around this, and blockchain is well suited to assist in data integrity and also authenticity of digital assets or digital artifacts, if you will.
Yeah, exactly. So that's right, because if you can produce produce content and authenticate it on the blockchain, then you know that it's original.
Exactly.
Yeah.
Voices haven't been tampered with, images, pixels haven't been moved around to deceive anyone. And so that's going to be a big thing moving forward, because wars have started over pictures. And if people are able to, it's a propaganda tool that we need to make sure doesn't fall, we have authenticity to fall back on, and verifiability to fall back on, so that propagandists in wherever they may be, whether that's Russia, China, even people in the US that are wanting to start trouble, they don't have that as a tool.
Well, my team has had a lot of fun doing deep fakes, putting my face on.
Yeah,
making Tom Cruise look better with my face. They've done things like that. So
nice.
So yeah,
need to put you on RFK. He's jacked. Have you seen his workout video?
I have. I've seen him doing his 200 push-ups.
That puts me to shame. I'm in the Army still. I cannot do 200 straight push-ups.
But you used to back in the day,
right? When I was 20 years ago. Yeah,
20 years ago. I mean, you don't look more than 30. Come on, you were in the Army when you were 10.
36. So yeah, I should say 18 years ago when I was 18.
All right. So where do you see, so I think this is the first time at the summit that we're actually going to be talking about AI, right? And in previous summits has only been about different crypto and blockchain issues. So, and given the research and knowledge that you've done in the field, where do you see the future of AI over the next 10 years, and how does AI and blockchain come together?
Yeah, I think there's a lot of people out there that are concerned. Andrew Yang is one of them. I've read his book on this topic. He's very concerned about the job losses that'll be accrued from AI. And I do think he's correct in that there will be loss of jobs. But as someone who studied political science and history and economics, there have been many technological revolutions that have created mass dislocation for jobs in whatever jurisdiction it took place in, like the Industrial Revolution, various, the boom in computers, they have all created mass dislocation, but they've also created a boon of jobs in an area that was at that point unknown. And so I do think that there will be some challenges reskilling people, but AI is going to create as many, if not more, jobs than it dislocates. They're just going to be different kinds of jobs. There's going to be fewer repetitive tasks, menial task type jobs, and more jobs that require emotional intelligence and just greater dexterity. I don't think AGI, as they call it, or artificial general intelligence, is a near-term thing. I've heard some talks that people think that it's 10 years out, 5 years out. Not being a scientist, computer scientist myself, I can't speak to that, but I do estimate that it's going to be longer than that. I mean, people have been talking about AGI for decades. So I think we have at least a decade before we're at a point where there's really serious risks of artificial general intelligence. And by then, I think 10 years is quite a long time, and we can design some systems to properly regulate it. So, yeah, I do think it's going to be an interesting challenge, with stocks like NVIDIA shooting up like crazy because they're making the chips for these GPUs that are training these models. I'm a little bearish on NVIDIA. I actually think that they're overvalued based to their,
I agree.
Yeah, based on the metrics. I actually shorted NVIDIA, which, who knows, that's a risky bet. It was a very small short, but it was just kind of more like a convictional. I think NVIDIA is overvalued. There's going to be more competition in that market. And now the compute power necessary, absolutely massive. So I'm not bearish on the compute that's necessary for AI, but I think because NVIDIA is making so many massive profits, there's a lot of other companies that are that work in the microchip industry that are going to, integrated circuits, et cetera, that are going to try to compete their margins down a little bit. So that's why I'm a little bearish on NVIDIA.
Well, speaking of NVIDIA, I mean, IBM has bought that company with the analog chip, right? And the future is analog chips. And so that analog chip can do at light speed what arrays of GPUs do, at relatively slow speeds. So that's, if I was to short NVIDIA, I would short it for that reason, because IBM's new chip is the NVIDIA killer. That's my personal opinion on that. And I've been tracking that. It was a little startup over a year ago, and they had the patents on this, and then IBM bought the company recently to bring it to mass scale.
Yeah.
So I don't, I wouldn't be as bold as to short a stock, because you just, it's a kind of thing, it's like, it's going to happen, they can't stay up there forever, but you don't know when. And if in between now and when the stock prices do fall, assuming your bet is right, if there is a run up, can you survive the short squeeze, right? That's the problem with shorts.
Oh, absolutely. Right. Yeah. It was more of a conventional thing. It's a very, very small short position. So I can certainly, if I lose double my money, it'll be more of a sort of a convictional thing.
So you go out and say, I was right. Yep. Here's the proof.
Yep.
So yeah, I do agree with you that artificial general intelligence is a ways away. And, like our own marketing team uses ChatGPT heavily to produce content. And I review enough of it where when I look at it, okay, I know what was ChatGPT produced, right? And what was human produced. It's like, it becomes so obvious when you see it. So these algorithms that detect whether it was AI produced or not, it's easy to understand how they work, because as a human being, and I read enough that it's like, okay, I could pick it out. I could even pick out now when I read the content which sentence was Chat GPT produced. And then as I'm sure you saw the last Republican debate, who was it that said that Vivek Ramaswamy sounded like ChatGPT.
That's a good line.
Yeah, that was a good line, except I read enough of ChatGPT to know that no, he does not.
Yeah. I agree. I think, Chat GPT is good for creating content that does not have to be not high level business content, though. It's not capable of producing a legal brief at a high level. Now, one thing that is interesting, though, is code is pretty black and white. It's binary, and and things involving like mathematics and computer science. I think Chat GPT has got an interesting leg up to, I can go on there and ask it to write lines of code that it would take me years to learn. So that's an interesting piece. But I think on the language and production of like business concepts, legal concepts, these expert opinions on geopolitical concepts, it's going to be woefully lacking, because it's just taking the average, it's pulling from a bunch of data that's just subpar, just because people put anything on the internet, right? a lot of non-expert opinions on the internet.
Yeah, because the thing about writing code thing about training ChatGPT on code is that there's so much good code out there.
Exactly.
Clean.
And it's perfect.
And it is perfect and has been tested over the sands of time. So yes, I had a thought, and I'm getting old. I had a thought, and it's just gone. But okay. Poof. So back on your comment about general intelligence. I don't believe AI is going to be able to replace general human intelligence anytime soon. I do equate it to just a fast calculator. It's doing things computationally really fast, and it's speeding up the process, which, as a non-technical person, you look at it and say, wow, this looks like human. Okay. But when you understand the code underneath, it's like, it's really not. It's not that wild. Although there's a couple of areas in large language models that have even stunned the scientists, and they don't know why it works. And so it's, usually computers, when they don't work right, they break. They don't work right at all. They don't give you anything valuable. Right? But here's a situation when a computer doesn't work right, and it does something very interesting, like chain of thought. Right? So what we discovered was, as the language models got really big, like into the hundreds of billions of tokens, it's able to do chain of thought processing, like A is equal to B is equal to C, therefore A is equal to C, right? And there's some theories running around as to why it's doing it, but no one has a specific explanation as to why it actually works, right? Because it's just it's just a statistical model, and so how does it conclude that A is equal to C, right? So that mystery is still out there. Is why does chain of thought actually work in large language models? Because it's not supposed to. And that's kind of the fact that a computer system can get big enough and random enough where now it does something that you don't expect it. That's now you start going to the whole sci-fi part of this thing. Like that's like Hal in the Space Odyssey, right? Is doing something that it wasn't programmed to do. It's right. Literally, you threw enough data, added enough computing power at it, and now it's doing something that's way outside of its original programming. So there is a few things here on the fringes that are interesting, and once we get to the bottom, answer those questions, we could figure out the next evolution of artificial intelligence. But artificial intelligence, which I think it's a term, it's a good marketing term, right? It's a good term to spark the imagination, okay? But I think it's a little bit more than it promises. That the term promises more than what the reality is. And the reality is that, at least in my opinion, that it's just like any other mechanization. And the analogy I like to give is the washing machine, right? So before washing machines, people wash clothes by hand, and it took hours every week, right? And when the washing machine came out, what happened? It was we all got more time on our hands. Okay, and yes, some laundry services were displaced, but more jobs were created because we all got time on our hands, so that we can reinvest that time back into the economy and create new innovations. So that's ultimately how I see AI resulting in is maybe even if it directly does not create more jobs, if it, the analogy is that, hey, you created the automobile, now you need people to build and fix the automobile. But let's just say AI doesn't have that cycle, but AI will free, because it'll democratize so much, and it'll free so much of our times that all of us will have more time to put back into the economy. And I think that's the real lift of the AI is the increase in productivity. Right? And when you increase productivity, and this is really important because there's two ways to bring down inflation, right? Is reduce spending and restrict cash in the system, is what we're doing with high interest rate, what the Fed is trying to do, right? Okay. The other way to reduce inflation is to increase productivity. Right? So if we increase productivity, inflation will come down. Okay. And then when inflation comes down, then the politicians can be happy again. They print all the money they want and continue to raise up the debt, right?
Right.
Right. Once we, the plebeians, work hard and give them the money, they'll just go and spend it. Sorry, that's my political commentary of the.
That would be held true over the last several decades, to be sure.
I think throughout human history, every government has done the same thing.
Yeah, that's true.
Every king wants the money.
Most governments haven't had the ability to do it at the same scale that the U.S. government can do it. I was reading just this morning about Ulysses S. Grant's presidency, and there wasn't a central bank at that point. And so like they didn't have certain monetary policy at their disposal. Now they did buy bonds, like the Treasury Department did buy bonds and did have economic stimulus, but they couldn't be the lender of last resort. And obviously that's over 100 years ago, but in the last 100 years, the ability to be the lender of last resort has really proved to be kind of like, sort of like, what would you call it? Not Novocaine, but penicillin, right? Or just like a painkiller. Like it really helps in the short term, but we get addicted to it. And I think our economy is addicted to stimulus at this point.
Yes. And if we could talk about painkillers, we can go down to a whole nother good hole with Oxycontin and the FDA and the mess they made of that and created a whole society of addiction.
Yeah.
But anyway, different story. But bottom line is the real solution to, I think, my personal opinion. And since there is a lot of politicians at the Texas Blockchain Summit in next month, I would say the real solution to any of these social problems is further democratizations. That means more freedom to everyone to do what they're supposed to want to do, and people have proper property rights and protected property rights, and that's where blockchain comes in and solves a lot of those problems. And more freedom, that's where AI comes in to give you time back, which is the most valuable asset we all have. So we will solve these problems through technology. That's what you and I will do, solve these problems through technology as opposed to solving them through legislation. And I think that's
technology and human creativity. Combine those two things together, and it's a pretty powerful tool.
Yes. And I think that's what America is really all about, and is how we became such a great nation. Is we focused on technology, innovation, and the human spirit. So I'm
fired up.
With that said, I'm going to make another big announcement that Lee and his family are coming to Puerto Rico on November 4th.
Big party
At my house, as that is the Indian festival of Diwali. We are celebrating on November 4th. Saturday, and Lee is coming over to meet me, and our families will meet all of the the wonderful people that are listening in this podcast. So many of you are in Puerto Rico, so many of you in Dorado will be at my party. So come over and meet Lee. What about 2 weeks now? Or
November 4th, I think. Yeah, it'd be our first time to Puerto Rico. I've actually never been.
Yeah, it's just like Texas. You won't be able to tell the difference.
The spirit will be the same.
Yes. The flags are similar. The spirit's the same. Okay.
The geography, you got to speak there.
Yes. Last words from Lee, and I know you have to go in a few minutes. One question I didn't get to ask you at the beginning is how was you grew up in Texas, I'm assuming?
Yeah, grew up in Austin.
Yeah. So how was the values that you grew up with? How was that carried you through life, and where do you see those values taking you in the future?
Yeah, I think my dad was a high school teacher and football, baseball coach for his whole career, 45, 46 years doing that. My mom was a writer, and then she stayed-home mom for 2 decades, and then went back to work after that. So very, very humble beginnings, but very I would say high character, no nonsense. My dad was raised by West Texas farmers. My mom was raised in Dallas by just high integrity people, and so I hope to carry on that legacy through the way that I comport myself. It's not always easy in this pace of life that we are in today to hold on to values that what we'll call traditional values that have been passed down from generation to generation, and certainly are not uniquely American, or there's been a lot of sort of rose-colored glasses looking at American society. We've not always practiced what we preached, if you will, as a society here. But I am very proud of what my parents have done and instilled in me and my siblings. And so my wife and I are working to instill those values in our kids. And sometimes that means being a little bit more, less thirsty, to use like a modern term, a little bit more willing to kind of push others up into the spotlight. And I think that served me well, because it's allowed me to gather people around me that are high achievers and far higher than I will ever reach, but they're interested in being associated with us because they know that I'm going to do my best to make them increase their brand or make connections for them. And that it's sort of like principles out of Dale Carnegie's book, How to Win Friends and Influence People. I gave that to all of our staff recently, and it's been I read it every couple of years, and unfortunately I oftentimes forget to practice it, in the heat of the moment. But if I can go back to some of those principles of sort of like emotional intelligence and things that really spur others to greatness, then if you're part of that, then typically it works out well for the person that's inspiring and leading alongside those kind of high achievers.
Yeah, so I'm going to summarize what you just said into basically one sentence, and correct me if I'm wrong, which is, don't make it all about me, make it about us, or even more importantly, make it about your client or the other person. Start with adding value first before trying to think about how to extract value, get the sale done. And for the loan officers and realtors that are listening to this podcast right now, is what I hear you saying is, think about your client first, add value to your client without the expectation of the commission, and you will see your business flourish. Is that
right? Yep, that's exactly right. Tried and true principles that are so easy to forget in this age, and that sometimes I forget as well because of the pace of life that we live in today. It's just unprecedented in human history. All right. Yeah. Well
Do
said.
you have time for one more question? You got to run.
Yeah, hit me.
Okay, so this is the question that is going to hit you. So, what do you do? Right, I'm sure you've taken a few hits in your life, and I'm sure you've taken a few hits in your life that's knocked you on your behind. And what do you do when you're taking those hits and you're just sitting on your behind and you're frustrated, you're angry, and how do you lift yourself back up?
I think the key is if I'm doing things as I should, I have community around me that lifts me back up. That's my wife, that's friends, that's colleagues. If I'm living sort of in a insular or sort of myopic way, then I'm going to try to do it on my own power, and that's going to probably be more painful and not work out as well as if I built that support system.
I love that answer. That is so well said. Boom.
Boom.
Yes. Well, thank you, Lee. I know you got another call to run to. You're very generous with your time. Don't forget, everybody. Was it November 15th, right?
That's right. 15th through 17th in DFW.
Yeah. It's in Dallas this year. It's not in Austin.
That's correct. Yeah, it's actually at the Fort Worth Convention Center, which is about the same distance from DFW International Airport as downtown Dallas is.
Okay.
And tell us one more time the website where they can register and get their ticket to attend.
Yeah, it's NorthAmericanBlockchainSummit.com. I said .org earlier, but it's actually .com.
Yeah. All right. Well, glad I asked, and we'll put it in the chat here too as well.
North American Blockchain Summit.com. And for all our friends in Puerto Rico, Lee has a special offer, which is if you come out to support RFK, you will get a free VIP ticket to the summit and a meeting with RFK.
That's right. We're putting on a fundraiser for him, and as you know, fundraisers for presidential candidates aren't cheap. So we're raising money for him just because of his support for privacy, innovation, digital assets, Bitcoin. And so anybody from Puerto Rico that wants to come out and contribute to that fundraiser at the threshold that he and his team have set, we will return the favor and provide a complimentary VIP ticket.
And I do have to add disclaimer. I myself personally, AngelAi or SunWest Mortgage do not endorse or support any particular candidate. We are just doing our public service, getting information out there. And this is a important component to Texas Blockchains Council. And they are our proud guest today. And thank you so much for being on our podcast today.
Thanks, Pavan.
Cheers. Thank you.
Cheers.
Thanks, everyone.
Bye-bye.
Awesome.